Hi everyone. In today's video, I want to just mention some very important points about candlesticks. Many are thinking that the candlestick psychology is new. No, it's not new. The only issue with candlestick psychology is that many people don't pay attention to it. I've said it over and over again. The Japanese started trading with candlesticks. But when the candlestick got to the west, it became candlestick patterns. Now, that is not the history that I want to talk about briefly in this video. What I want to share with you in this video is for you to see the advantages of candlesticks in your trading. When you begin to use candlesticks in your trading, you are going to begin to enjoy a lot of things. And those things are the things I want to mention to you. First and foremost, the candlesticks will help you to quickly understand, number one, direction. We quickly help you to understand direction. Now, this direction can be put into different areas depending on the type of a trader you are. If you are a scalper, it can help you to quickly understand a direction within a particular time frame. Okay, because candlesticks tells you what to do within a time frame. As a scalper, you can trade 1 hour candlesticks, so you will know what is going to happen between 1 hour candlesticks. So you can use 1 hour candlestick, 30-minute candlestick, 15-minute candlesticks to determine the direction and at the same time to determine how much you can take out from the market. So candlesticks helps you to understand direction. That's number one. In some of my previous videos, I've mentioned these things over and over, and I continue to say it because I want you to understand the advantages that a trading with candlesticks will give to you. Now, if I'm trading a weekly candle, all I need to do is to just predict weekly candlesticks. I'll go into the weekly time frame and I'll be able to predict the next week candle. The moment I'm able to do that, it gives me an advantage. I know that, okay, the whole of next week, this is what it's going to be like. Now, I'll give you an example with this trade. Now, let's go back to this trade and see the weekly candles. Now, for me in this trade, I've been able to predict that the next week candle after this green candle is going to be a sell as it's going like this. So without even looking at levels and all of that, trying to look at structure, even though I've looked at the structure and I've looked at the level, but I have been able to predict the next week candle. I've been able to predict the direction. This is one of the most powerful things in trading. In trading, you need to know a direction. Candlesticks helps you to do that very fast, that you can predict the next candle. Now, sometimes people feel that it is not possible to predict the next candlestick, the next day, the next week, the next one. It is possible. I have also realized that even most of the news, fundamental news that we listen to, highly in line with candlesticks. How are they in line with candlesticks? I just give you an idea. Let's say you want to trade a non-farm payroll and you're looking at the monthly candlesticks. Let's see, monthly candlesticks. Now, candlesticks, they are graphical representation of the activities of both buyers and sellers. I repeat, candlestick is a graphical representation of both of the activities of both the buyers and sellers. Now, what does that mean? If the whole of next week or if the whole of last month was selling, okay? If the whole of last month was selling and it was selling very strongly, what it means is that the market, the activities of the, let's use United States, okay? The economy of the United States, if everything was selling and selling and it was selling very strongly, and in this new month, you are waiting for a non-farm payroll news. Now, how does candlestick suggest the direction? Because the whole of the last month has given us an idea that the economy of the United States was weak. And depending on the type of a candle, we can predict that this month non-farm payroll is going to be weak. It's going to be weak because whatever has made the economy to be weak, and we have seen it that is being represented with the way the candlestick formed last month, we can predict it. So the candlestick gives you an idea of direction. Most times, in fact, more than 90% of the time that we have seen it, even though we don't come into the market around that period, we are mostly right in most of the time. 9 out of 10, we are right, okay, with a candlestick because we already saw it the previous month. And you know that even the data that comes out, the people that predict, the predictions are based on, oh, last month was this, and this is what they are predicting this month. So it gives us the direction, both fundamental and technical. Candlesticks does that, okay? Now, let's move forward again. With the candlesticks, we can know the what we can take from the market. We can know what we can take from the market. What do I mean by what we can take from the market? How much we can pull out from the market? Because the way the market is moving, we can see the levels. We can see the levels and be able to predict that, okay, we can take this much out within a particular time frame in the market. Candlesticks also helps you. I'll give you an example to that. So let's go back to our weekly candle. Let's go back to our weekly candle. Now, in this weekly candle, looking at it like this, you see the candlestick. This is the candle we analyzed to trade this candle. But I already have a level here. Then I have another level here. So knowing that the market is coming down, I know on a weekly, this market is likely going to get to this area. And if the market gets to this area, I'm going to be having almost risk to reward based on the way the market is going, almost risk to reward because right now is at touched 70. So by the time it gets here, it's going to be around risk to reward 1 to 80 or 90. So it is the candlesticks that helps you to know that in your analysis, how much can you really pull out from the market? Candlestick helps you to know that. Okay, that's number 2. In number 3, candlesticks actually helps you with your entry, which is very, very important. Entry. It helps you. You'll be able to know there's something in candlestick that we call an entry candle. An entry candle. And we do that on a lower time frame, an entry candle. You know, a lot of times I see traders when they enter the market, which is also very powerful. They enter the market, their direction is right, the entry is also right, and but there is something they have not. Many of them are not fully aware of, is the fourth point, which is the stop loss. The stop loss. Okay, this is where a lot of times too I have an advantage, or we have an advantage over other people. Now, where they put their stop loss can determine a lot with their risk to reward. Where they put their stop loss can determine a lot, and that is why our advantage here in our class, it's that stop loss is very powerful. Very, very powerful. And that is determined by the understanding of candlesticks that we have. And at the same time, knowing what we call entry candle. There is an entry candle. Now, when you are able to pick out the entry candle, which is highly dependent on understanding of candlestick psychology, when you pick it up, your stop loss becomes very, very small. Unlike others where where they think they put a stop loss, which I understand with them, if you don't have an understanding of candlestick, You are going to put your stop loss in areas where you have concluded or you think the market will not get into. Okay, so for us, by the time we are using 10 pips stop loss, which is going to be based on entry candle, some people might be using the where we use 10 pips, some people might use 30 pips. Some people might even use 40 pips. And they have reasons why they are putting 30 pips or why they are putting 40 pips. And of course, when market begins to move, market might not go there. But okay, let's look at it very carefully. Now, let's say I'm trying to risk $1,000 in my trade, and $1,000 is, let's say, is 1% of my capital. Now I'm risking $1,000. Now, in this $1,000, if my stop loss is going to eat, maybe my stop loss for me is just 10 pips. Okay. And that 10 pips probably give me like maybe depending on the pair I'm trading, maybe this 10 pips is like I am risking 100 pips, $100. Okay. $100 from this $1,000 that is my 1%. So um sorry, I am risking $1,000, and that's what I want to risk. Now, by the time I am dividing the $1,000 into pips, you know that your stop loss, okay, and your lot size, your stop loss is going to determine your lot size. So for someone who is going to be risking a lot, maybe you are risking 40 pips and you have $1,000 to risk, okay, 40 pips. Maybe at the end of the day, your lot size is going to be like, let's just assuming just your lot size is going to be 3 lot size. Just assuming 3 lot size because you are risking 40 pips, assuming, okay? For me, if I'm now risking 10 pips, where your lot size is 4 or 3 lot size, my lot size might be 6 lots. Okay? So imagine what I can make with 6 lots and what you can make with 3 lots. And we are risking the same amount of money. We are risking the same 1%. My 1% is $1,000. Your own 1% is $1,000. But your stop loss is making your lot size to reduce. Meanwhile, my stop loss is making my lot size to increase. So by the time I am making so much money, okay, you are making little. By the time you are making, let's say, by the time you make 30 pips with lot size 3, okay, I have probably made 50 pips with lot size 6. So you can see how it gives me an advantage over you. Now, two of us are winning. Two of us are winning. But there is more that I'm packing out of the market, much more than you. And the only advantage I have is because I understand candlesticks. So the candlesticks has given me an idea with my entry candle that has reduced my stop loss drastically than yours. In fact, I realize that sometimes some people have risk to reward 1 to 3, and the way they have that risk to reward 1 to 3, based on their entry, my own risk to reward, it could be 1 to 10. And the difference between that is because I understand entry candle. So in the next video, I am going to be showing you what an entry candle looks like. Yes, I'm going to be showing you that. But of course, that doesn't mean you are going to be able to use it, every time until you properly understand it carefully. Okay? So an entry candle helps to determine your stop loss, and at the same time, it will help you to really, which that stop loss is going to help you to calculate your lot size, and your lot size is going to speak a lot about how much you are able to make from the market. So in the next video, I will be sharing about the entry candle so that I will use it to let's just quickly do something before we close, before I end this video. Now let me go to my entry candle in this market. Okay. Now this market has given me risk to reward 1 to 50, 1 to 70. So I already have 1 to 70 here now. Risk to reward 1 to 70. And this same market that has given me risk to reward 1 to 70, but note something. The risk to reward 1 to 70, it is a trade that is lasting. It has lasted for 3 days. 3 days gone. So this is the 4th day. Now let me show you that so that you will know. Let's go to our daily candlestick. Okay, so let's go to our daily candlestick. Now, in our daily candlestick, you see that this is our day 1. This is our day 2. This is our day 3. Okay, so we are already now in day 4. We just started day 4 right now. And this is where we are targeting. Okay, so as day 4 open, it has already hit risk to reward 1 to 70. Okay, so we have this trade that has run for 3 days already gone. This is the 4th day that is going. Okay, so we've been able to make risk to reward 1 to 70. Now, imagine somebody who's trading every day, every day, every day. You might make some, maybe you are making risk to reward 1 to 10 per day, which is also very wonderful. So these candlesticks allow your market to run so that you will pack maximum profit out of the market. It helps you to know that you still have a lot in the market. You allow it to run. Candlesticks allow you to, it gives you the understanding that allows you to know that the market is still moving. So you will not just end the market in such a way that by the time you are out of the market, you now notice that the market is still moving in your direction. That, oh, I will have been able to pack a lot. These are the things candlesticks helps you to do. Okay, like I said, I want to show you the entry candle with this one. So let's see the entry candle. I think I will leave that till the next class, because this video is getting longer, and I need to stop here now. But the next video is going to be talking about the entry candle. There is also a particular trade that I also took. I took that trade. I think it's synthetic indices. Synthetic indices. We took that trade. Okay, synthetic indices. That is it here. Yes, this is a trade, and this trade has lasted for the trade was entered from the first one. This is day 1. This is day 2. This is day 3. This is day 4. Day 5. This is on the 6th day. On the 6th day, and on the chart where we have entered is already on risk to reward 1 to, I think, 1 to 75 or something. Okay, for 6 days. So it gives you an advantage. Candlestick gives you an advantage. And in the next video, I'll be talking about entry candle, and I'll be showing you how it determines, it helps you to know your stop loss, and also help you to calculate your lot sizes. Thank you very much, everyone. Prepare for the next video. I really appreciate it. God bless you.